please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Asia's trading mixed this morning. The Chinese market's down about 0.5%. On the other hand, Japan, Hong Kong up a bit, and the SGX Nifty, as you saw on your screen, is suggesting a start in the green, though a very mild one. But it's time now to drill it down to individual stocks. This is CNBC TV18's top 10 list of stocks to track for today. Anuj, and what do you have for us? Yeah, so
Rima, healthcare I think is the one where my sense is there was some genuine buying. Apollo Hospitals, for example, that it has been bouncing from 4-year consolidation and very strong delivery buying on Friday. So I would want to see if there's follow through. And this is not a day call, but just reiteration of portfolio investing. Bajaj Finance making fresh all-time high on Friday. Delivery buying of nearly 300 crores. So I guess stock for all season, and from 1600 to 2200, what a move it's been after that correction.
Oh yeah, so this is one stock I guess which has maximum consensus on it as well. So Bajaj Finance on our list. Let's move to the gas companies. They were very excited in trade as we were ending up on Friday. And Sonal, there's more news this morning, price hikes.
Yes, exactly. So, after IGL and Gujarat Gas, now MGL has increased prices on CNG and PNG. On CNG, it has been increased by around 4%. On PNG, it has been increased by around 1.5%. And this is done for the same reason, that is depreciation in the rupee and also rising raw material costs. Remember, this is the second price hike. The last one was taken in April 2018. And CLSA says this is a positive move for all the city gas distribution companies. For MGL, it is important because not only will this protect the current margins, there is the potential of upside in margins in Q1 of FY19. Also, this will reduce the 30% PE discount to IGL for MGL particularly. I expect the stock to do well in trade today.
Okay, thank you very much for that. Ekta, Fortis, D-Day.
Well, it is one of the D-days for Fortis. There have been so many. But for today, the Q4 numbers are going to come out. Plus, there will be a Luthra Luthra report where the details of that particular report will be published today. So obviously, I think the street would be nervous because in case there are some larger than expected details from that report, then it could probably impact the final bids from the 4 players, which is due on the 14th of June. So hence, it would be important.
Okay, and Ekta, what about Sun Pharma? There was quite a bit of buying on Friday.
Yes, absolutely, Anuj. You pointed that out. And delivery buying of 500 odd crores for Sun Pharma on Friday, 32%, which was marked for delivery. So strong amount of interest which came in there. Separately, the brokerages are also quite sanguine. So, for example, Motilal has raised the target price to over 600 rupees. But the likes of Macquarie have said that, this particular event with regards to Halol is factored in as the management commentary had highlighted that.
Okay, all right, Ekta, thanks very much for that. Abhishek, PNB wants to sell some stake at least in its housing finance company?
Well, Surbi, not only housing finance company, but across the investment that it has over the listed companies. So PNB is looking to pare down its stake in PNB Housing Finance, ICRA, CRISIL and BSE Limited. Now, we know that PNB Housing Finance is a cash cow for the company, wherein they hold 33%, which values at about 6,260 crore, given the current market cap. And amongst the other is ICRA, wherein it holds about 3.4% stake, which is valued at 113 crore. So, they are targeting to garner about 12 to 13,000 crore in H1 FY19, of which a majority of the stake can come in from PNB Housing stake sale. Back to you.
Okay, thank you very much for that. And auditor exits have roiled many mid-cap companies, and this time it seems to be Inox Wind where the auditor has resigned, Anisha.
Well, yes, as you mentioned, there have been a lot of companies where we have seen this action, and today it looks like Inox Wind is going to be under pressure because Patankar and Associates, which were the statutory auditors of the company since 2013, have decided to walk out of the company. Now, the management maintains that this is a mutual decision, and the statutory auditors have been asking to exit the company given the time constraints and the other commitments that they have. But this is now that they have decided that they would be let go. Now, remember, the company says that the auditors have issued an unmodified opinion when it comes to the FY18 accounts. They will continue as auditors till the annual general meeting, which is expected somewhere in July. But of course, the stock had listed at levels of around 420. We have not seen those levels come by. The stock is in fact now trading sub 100. The performance has been weak. So this will definitely rile up investor concerns as well. Back to you.
Okay.
Okay, all right, Anisha, thanks very much for that. In fact, let's just take that story forward on Inox Wind, where we just heard that the auditors have resigned. Deepak Usher, director of Inox Wind, is joining in. Mr. Usher, good morning. The reasoning that we got in the communication to the exchanges, what auditors suddenly realized they don't have time. I mean, can you explain that to us?
Sure. Yeah. Hi. Good morning. First of all, it's not as if that the auditors suddenly realized that they didn't have time. They have been expressing to the management of the company concerns about time availability because of their other commitments for a year now. And, we were trying to persuade them to continue because obviously resignation of auditors does seem to have some negative connotations. But at the end of this financial year, FY18, they realized that they really couldn't continue with this assignment anymore and hence decided to resign. Having said that, I'd like to clarify that this resignation is different from the other resignations that we have seen on the street in three specific ways. First of all, this resignation has been put in after satisfactorily completing the audit for the financial year 17-18. The auditors have given an unqualified, what technically is called an unmodified opinion, without expressing any reservations, any qualifications, or any concerns on the financial statements of the company. In fact, the auditors have confirmed that the financial statements of the company reflect a true and fair view. There have not been any concerns whatsoever on the availability of information or on the content or the quality of the financial statements. Second of all, this resignation is not an abrupt resignation causing what technically is called a casual vacancy. In fact, the auditors have been graceful enough to say that while they are resigning, they will continue to hold office till the next annual general meeting in order to give the shareholders an opportunity to appoint the new auditors at that annual general meeting. And therefore, the auditors will continue to be available and hold their office till the conclusion of the next annual general meeting. We'll also attend the next annual general meeting and will be available to respond to any questions or concerns or queries that any members will have at that AGM. And third of all, the relationship with the auditors continues for the other work, because the auditors were also our tax auditors, and therefore they'll continue to work with us in terms of the tax audit, in the filing of income tax returns and the assessment. And hence, this is a completely normal resignation occasioned by time constraints because of their other commitments, and there's nothing untoward as far as this resignation is concerned.
Okay, but Mr. Usher, good morning. You said it's different. Well, what's similar is the timing, and that is something that, it's a season of auditors resigning, but I think that's something that the market will get a bit nervous about. That, I understand the reasoning, but why now? When all of a sudden, all these issues are coming up.
I do understand that the timing indeed has been unfortunate because of the spate of resignations that we are seeing in the market. Quite a few of them have been because of concerns about the quality of financial statements or about the lack of information availability from the management. But as the resignation letters of the auditors and our own test statements clearly indicate, as well as the clarifications that I just provided indicate, there is nothing untoward about this resignation. In a sense, this timing is not inopportune because at the next annual general meeting, which is scheduled sometime in July, the shareholders will have an opportunity to appoint the new auditors, and it was necessary to have the new auditors in place before the limited review results for the June quarter would need to be announced. And as you know, being a listed company, we needed to announce those results by the mid of August, and therefore having the new auditors in place sometime in July would ensure that the new auditors would have appropriate time in order to conduct a limited review for the first quarter. So in that sense, the timing is not that unfortunate. It actually ensures a pretty smooth transition from the old auditors to the new auditors.
On the first quarter, Mr. Usher, I understand we're still in the quarter, but just a general sense. Now, you did manage to lower your receivables. There was some improvement in the working capital cycle as well over FY18 compared to the previous fiscal year. The number that I have is that your net receivables were around 1,000 odd crores, 1,060 crores. Can you give us a target? How is that moving now? Are receivables coming down? And there's been some worry about several states looking to go back on PPAs because they want the current low spot tariffs. So could this have an impact? Are we expecting any major write-offs going forward?
Well, the intent of this interaction was in order for us to clarify the position as far as the resignation of the auditor is concerned. I wasn't prepared to answer any questions on the state of the industry or the business, but let me just kind of address that in two broad senses. First of all, we believe that the transition period from the regulated tariff to the market-driven auction-based tariff is completed. We see a fairly robust space of government auctions happening, and we have a pretty healthy order book based on those auctions. In fact, it might be not out of place to say that we have one amongst the most healthy order books in the sector. And hence, in terms of performance for the ensuing quarter as well as the financial year, we don't really see any concern. In fact, we expect this state of reduction in the receivables to continue as it has been for the last few quarters. And hence, there's nothing to worry on that account. We also do not expect signed PPAs to be renegotiated or reneged upon, and hence we don't see any reason to have concerns about write-offs because of that reason as well.
All right, Mr. Asher, we'll leave it at that. Thank you very much for that. That's Inox Wind dismissing any market concerns about the auditor resignation. But the stock tells a different story. It listed at 427 in April of 2015, and now it's a double-digit stock below that 100 rupee mark as well. Sharp fall seen. But it's time to continue with our top 10 list of stocks that you need to track in today's trade. Abhishek, it's over to you. PSU banks.
Well, Rima, over the weekend, or let's say Friday after market, Finance Ministry mentioned that they will consider setting up of an AMC or an ARC under the leadership of PNB's chairman. So this committee will mull into assets, the stress-related assets, especially in the power sector. So stronger banks like SBI or Bank of Baroda can lend for weaker banks which are under PCA and not able to lend in a consortium lending. So watch out for SBI and BOB, wherein they can get a market share increase due to lending for or on behalf of the PCA banks. Back to you.
Okay, Abhishek, thanks a lot for that. Sonal, what about other stocks and news?
Couple of them on my radar today. I'll start with ICICI Bank. Now, PDI is saying that US SEC will be looking into the Chanda Kochar and Videocon controversy, and that is why that stock will be in focus today. Phoenix Mills, that is expanding its retail portfolio and has now acquired an under-construction retail mall in Lucknow for a consideration of 453 crore rupees. Expect that stock to do well in trade today. Avanti Feeds is another stock in focus because they have an EGM on 14 June to consider stock split and also bonus issue of shares. Expect that stock to do well in trade today. IDBI Bank, now reports are suggesting that government is pressing on with the plan to sell a stake in IDBI Bank and might sell it to LIC, but we have not independently verified them, and these are all reports. Back to you.
Okay, Sonal, thanks very much for that. So lots of stocks to work with this Monday morning. Here's a quick recap. The stocks that are expected to gain include Apollo Hospitals, Bajaj Finance, Mahanagar Gas, Sun Pharma, PNB, Phoenix Mills, Avanti Feeds, IDBI Bank, SBI, as well as Bank of Baroda. Stocks that could see some pressure today: Fortis Healthcare, Inox Wind, and ICICI Bank.
And here is a quick programming reminder. In our special series, Hunting for Value, today we will focus on a large index stock which has lost 49% this year, is down a whopping 60% from its 52-week high in Q4. The company posted its worst quarterly performance ever. Is it a value pick or a value trap? Do stay tuned in to catch the stock and its value metrics at 9:50 only on CNBC TV18.
Well, the SGX Nifty is indicating that once again we'll start right in the resistance zone. The market's been struggling somewhere around this mark. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning, gentlemen. Ashwini, what's the first trade? And of course, what's the overall trade? You reckon this is a market where you want to buy the dips or sell the rallies? Okay, Ashwini, can you hear me? Okay, I think we're having some problem with Ashwini. But Ashwini, good morning. I was asking you if this is a market where you would want to buy the dips or sell the rallies.
Well, good morning. You need to increase the volume in my earpiece. And the second thing is, this is a fairly limp market. I don't think there is great amount of follow through on either side. So the best thing not to do is not to look for breakouts. I'm interested in selling boundaries. Now a smaller boundary is say 10,680 about 10,820, 850. But I can't see us getting to new highs. This 10,800, 900 is going to stop the market. In terms of Bank Nifty, again, on a bad day, 26,200, 300, those are zones to buy. Anything higher than 26,800, I think the risk reward is not favorable. And you have to approach it like a trading market. I don't think playing for trends or buying after large upsides will really help. Broadly, I think it's specific sectors which may give you better moves.
Okay, so Ashwini, good morning. Which are the sectors that you have your eye on?
Well, it appears that possibly pharma space could have more upside because the kind of moves it saw are very similar to the way IT bottomed out. Also, several new stocks like IGL, etc., they are coming back. Escorts is slowly pushing up. So, stocks like Spark, which moved up sharply, I think their bases are getting formed, and that is a lower risk buy at 10,800 thereabouts. Financials, I think, again will get into some sort of huddle because rising rates is never positive. But chances are, if you stay with Bajaj Twins, Reliance, Avenue Supermart, etc., things at new highs, you'll be safer.
Sudarshan, good morning. Markets took the 25 basis points rate hike in its stride last week, ended up with a gain of about 0.7%. But now we seem to be approaching that crucial level of 10,800 where the previous stop was placed. How would you approach Nifty trade now?
Yeah, good morning. Well, markets are buying the dips, aren't they? That was a 25 basis point rate hike and the markets bought it. On Friday, there was a sharp correction, a gap down, and the markets bought that also. So my own sense is that we should be buyers in the Nifty. It's rather easy to, this is a rather easy trade. Whether it works out or not is a different matter. But the Nifty is telling us that the short-term trend is up. So I would suggest going long in the Nifty at the market open, give that traditional 5 or 10 minutes of cooling and go long in the Nifty. Your stops should be about 10,650. And we have to give it time. It's an inch by inch rally. It's not a rally that will go 50 points or 100 points in one go. That won't happen. So just give it time to go up. We should reach 10,900 if nothing goes wrong. So that's the trade for the index. The Nifty Bank doesn't give us the same opportunity. So I don't have a trade in the Nifty Bank.
Okay. Mitesh, good morning. How are you approaching the indices today?
Yeah, good morning. I have a slightly or mildly positive bias. We've had some choppiness, and I think, as you rightly highlighted, we'll possibly open around the supply zones of 10,800. But I think there's now some indicator setup indicating that we might actually be able to cross that. So I'll keep my triggers at about 10,815, 820, and if we start getting past that, then look for another 100 points happening on the upside. But also is the fact that this kind of upside bias on the Nifty suggests that I'll be trading more of long ideas on stock-specific basis as well. On the Bank Nifty, I think I again have a very range-bound view, not a very clear outcome. I think 26,150 to about 26,750 is my beginning range. If we break on either side, then I think we'll take some kind of a directional call.
Okay, fair enough. Let's discuss individual stocks then. Ashwini, what's on your list?
See, UBL is a buy with a stop of 1200, target of 1265. IGL is a buy with a stop of 274, target of 292. TV Today is a buy with a stop of 466, target of 490. Sun Pharma Advanced Research is a buy with a stop of 410, target of 435. And Escorts is a buy with a stop of 910, target of 945.
Okay, so going with lots of buys there on individual stocks. Sudarshan, let me ask you, on the index, you have a positive bent of mind. What about the trades for the day?
Well, the trades for the day also follow the same procedure. We go positive, we try to buy. Adani Enterprises is a buying opportunity. The stock has been in a mini bear market. That seems to be coming to an end now. So we are buying at a dip, a significant dip. It's a trade for the day and also a carry forward a positional trade. UBL is a buy. That stock is running away day after day. A small consolidation should again see a breakout on the upside. Kotak Bank is an outperformer. So I've explained that I don't have a pattern in the Nifty Bank, but it's much better to focus on the 2-3 private sector banks that are outperforming to be on the long side, and Kotak leads that pack. That's a buying opportunity. Hind Petro is a buy. The stock has been consolidating for almost 15-20 days. it is giving sense of an imminent breakout on the upside. We'll just have to take that chance, but we want to go long. And the only short sell I have is Cummins. Cummins is a short sell. There is nothing in the stock to commend itself, but sell only if you get a rally.
Okay, and Mitesh, your trades for today?
Yeah, more of buy calls. I have a buy on Cipla amongst the pharma names, and I like many stocks over there, but for the day I picked up Cipla. Keep a stop at 545, look for targets of 590. Amongst the OMCs, IOC looks like getting some kind of, or giving some kind of continuation signals. So I'll buy that with a stop at 170 for targets of 185. Union Bank, the indicator setup is now turning positive. Wait for that breakout above 96, 96.5, then buy with a stop at 93, look for targets of 104. And amongst one of the cash stocks, I have a buy on GSPL where we had a good price and volume action on Friday. So buy with a stop at 182 for targets of 207. And the solitary sell call is on Infibeam, where the indicators are now expanding on the negative side. So keep a stop at 157, trade short for targets of 141.
All right, gentlemen, thank you for now. We'll touch base later on in the trading lay. Let's turn our attention to Sun Pharma. That was clearly the star in Friday's trade, an 8% rally, the biggest rally, in fact, in the last 4 months, 500 crores of delivery-based buying. All that on the back of the Halol plant approaching near clearance. We're now joined by Surya Narayan Patra of Phillip Capital. Good morning and thanks so much for joining in. This is a much-awaited respite for Sun Pharma. It removes a key regulatory overhang. But is it already in the price now?
Yeah, good morning. So, we believe so. A large part of it is already there in the price. And see, the price action what we have witnessed immediately after the news flow, possibility is more than the fundamental factor than the kind of underweight what the market would be in pharma side that has really helped the stock appreciate that much. But otherwise, we feel that, okay, a large part of the kind of positivities of the development is already there in the price. So, why? Because, see, the development, the plant is under issue since long, and so there is less visibility about the kind of a product pipeline expected out of the plant. Though there are a couple of names are known, but so those products may not be that influential for the revenue base of Sun Pharma in US market, which is near about $2 billion. So that is how we think it is a kind of a neutral kind of a development now after the price action what we have witnessed already.
Surya, that was my question actually. What are you factoring in as and when this EIR comes through and all clear comes through? What sort of products do you think can first start coming out? What kind of approvals are you watching out for from Halol?
So there are a couple of known products are there, but those are not obviously significant, large enough. And the old product what used to be there, how economically viable those are at this current market scenario where no price correction has been significant in the matured product basket. So it is really difficult to assess that, okay, how many product would be critical enough to influence the overall revenue for Sun Pharma out of this plant. Though this plant is certainly a kind of is important one, considering the fact the kind of dosages or kind of offerings the plant is having in terms of injectables, to oral dosages and various other dosage-based products. So that is how it is important one, but in the near term, it may not incrementally surprise in terms of the positive side.
Okay. So the FY19 guidance given by the company was of low double-digit revenue growth. Yeah. Is there an upside risk to that?
Don't feel so. Why? Because the kind of challenges what it is visible. So, see, on the revenue front, there could be here and there 1%, 2%, couple of percentages here and there to the guidance. But the key concern is there on the margin front. So that is where still there is no comfort, given the kind of challenging scenario that is visible in the US market particularly. And unfortunately, the dependency for Sun Pharma on US is significantly large, and no other market can compensate any loss that happens to the US portfolio. And more importantly, the meaningful concerning factor is that the tariffs margin underperformance what we have been seeing, and which is a likely scenario even in future.
Okay, all right, Surya, we'll leave it on that note. Thank you very much for joining, and we need to take a quick break. Asia is holding up quite nicely, actually, barring mainland China. All of the markets are in green, including the SGX Nifty. So we'll come back, take stock of the FNOQs as well, and get you some more trading ideas. Nice and green ahead of lots of big events, global events this week. The biggest one of them, of course, taking place in Singapore. Right now, no problems there. Green across the screen, and SGX Nifty is also up about 0.25% last time I saw it. Yeah, 28 points on the screen. There we go. Let's get some more trade talk going. We've got VK Sharma of HDFC Securities joining in. VK, good morning. So the market, put up a resilient attempt at fight back. Last 2-3 days kind of gave us that sense. What is your reading, and how are you approaching things?
Our reading is that the market is wanting to go out there, and mind you, this coming weeks, obviously the central banks and obviously Mr. Trump in Singapore, and also the OPEC decision on June 22. So all these are worries, and markets like to climb all over worries. So our idea is that if we see a close above 10,806, which is just 40 or 38 points from Friday's close, is good enough for the markets to go up further, because that is the highest close that we have seen after that was done on 14th of May, a day before the election results were out in Bangalore. So I'm buying except for one particular stock.
Okay.
Sorry, Vinod, good morning. I said the market will climb wall of worries, but that's, when it's a bull market. We are still in a big bull market, you reckon?
We are not in a bear market, I know for that.
That I agree.
Yes, and I think that we would like to climb the market position says that we'd like to climb these wall of worries, and because the markets today have one more sector to look at, and that is this market is hungry for new sectors. The story, so because it wants to go up, so in form of pharma it gets another one sector. And perhaps with the banks, I think, will be taken care of. So my sense is that we'll go higher than lower from here, and especially because the RBI seems to be ahead of the curve. That is one advantage that we have.
Okay. Healthcare led gains, at least in Friday's trade, VK. More upside in Glenmark and Sun Pharma? Yeah,
I see more upside there. But since we have had a very sharp upside on Friday, 8% Sun Pharma, so I think for the series one will have to work, and therefore I'm suggesting a bull spread here, where you buy the 540 call at 12, sell the 560 call at 7, your cost comes to 5, and possible gains if it market closes above 560, then maybe you'll make 15 rupees or so. So that continues to be the call, and pharma sector per se should definitely do well in the current series. Glenmark, we have seen position being pruned for the series as well as on Friday. So, but 4% long positions, the stock went up by 4%. So I'm buying the 560 call at around 15, stop loss at 11, and target of around 22.
Vinod, you are also buying State Bank of India. Is that the only PSU bank on the buy side? There's a lot of noise once again, bad bank, etc. being formed, resolution of stressed assets. But SBI is the only trade, or what about other PSU banks?
You could look at maybe Indian Bank or Bank of Baroda, or for that matter, State Bank of India. But I'm gunning here because I see the bond yield should now come down and behave themselves. Maybe today itself will open slightly lower, and the fact that we are ahead of the curve will not bother the PSU so much. And with the 11 of the PSU banks in the PCA list, so I don't have any reason why those banks should do well. So I think that limits the options to Bank of Baroda and SBI. I am buying in SBI. I am buying the 275 call at 7.5, stop loss at 5, and target around 13.
Okay. And you have a couple of more better ideas.
One is Century on the long side. We have seen a position being built to the extent of 3% stock in the series. 2% positions were built on Friday. Stock is up 3%. I am buying the 950 call at 29, stop loss at 23, and a target around 40. Ashok Leyland is my lone sell call. So I'm just buying a put here at 145, stop loss at 4. I'm buying 145 put at 4.3, stop loss 3, target of around 7, primarily because the tonnage were increased. So if these trucks were to carry more, I think it will be psychologically weaker for the particular stock.
All right, Vinod, thanks a lot for your time today. Well, let's now invite Deepan Mehta in this discussion. Deepan, good morning. Sun Pharma first. You reckon it's a great buying opportunity now, or you think the good news is in the price, and the bigger issue now is about the price erosion and the competition in US, and even the Halol's clearance may not help the stock much?
I go with the latter argument. I think it's a great opportunity for investors who are stuck in Sun Pharma to make an exit. And clearly the underlying fundamentals of the industry have changed. The great US generics opportunity has more or less been captured by Indian companies, and going forward is going to be extremely challenging for them. The price erosion is going to be sustainable, and going forward also it's not going to be great margins in the US market. And all of a sudden, I think across the globe there's just far too much attention on drug prices, and that's going to put pressure on the entire industry to keep prices in check. And the strategy of Sun Pharma to get into specialties is really long-term and fraught with a lot of risk and a lot of expenditure on R&D, which may turn out to be wasteful. So I think every rise in not only just Sun Pharma, but entire pharma pack, similar companies like Lupin, Dr. Reddy's, and Aurobindo Pharma are opportunities for investors to exit out of the sector completely.
Okay. Deepan, stay on with us. We have lots of other questions for you as well, but we do need to take a break before the pre-opening rates hit us. When we come back, we'll also have Mr. S.P. Tulsian of sptulsian.com joining in with some long-term stock ideas.